Hi everyone, we're ready to get started. Thank you all for joining and welcome to the Javelin Strategy and Research webinar, Shifting Angles in Identity Fraud. Thank you for joining us for this conversation based on our 2021 identity fraud study. We are excited to bring in the industry experts to share their insights on how the shift to remote transactions during the pandemic irreversibly altered the fraud landscape. I'm Crystal Mendoza and I will go over some housekeeping items before we get started. If you hear an echo, please check your audio and make sure that telephone is selected. Questions are welcome, so please type them in the question box and we will answer as many as we can. If you have additional questions after the webinar, we'll provide contact information at the end of today's session. Finally, this webinar is being recorded and a link will be emailed to all participants tomorrow. Now I'm going to hand over the presentation to Tracy Kitten, Director of Fraud and Security at Javelin Strategy and Research.
Thank you. Hello, everyone. Tracy Kitten here. As Crystal mentioned, I'm the Director of Fraud and Security here at Javelin, and I'd like to introduce today's panelists. We have Kathy Stokes, Director of Fraud Prevention Programs at AARP. Kathy, if you just want to wave your hand. Eric Kraus, Vice President and General Manager of Fraud, Risk, and Compliance at FIS. Paige Schaffer, CEO of Global Identity and Cyber Protection at Generali Global Assistance. Cindy White, Chief Marketing Officer at Mitek. And David Henstock, Vice President of Identity Products at Visa. So thank you to all of you. Thank you for joining us, and thank you to the attendees. I'm going to provide a quick overview, if you could move to the next slide, please, just to kind of give some perspective on, where we see the industry right now, the landscape. So obviously 2020 was a year like no other, at least in our lifetimes. We all faced a global pandemic, and that really impacted not only victims of fraud, but also cyber criminals, because everyone was locked up at home. Consumers changed the way they interacted with one another, using Zoom calls, for instance, and making more purchases online, quickly transitioning to digital channels, especially during the height of isolation during those months of March, April, May, and even into June. But cyber criminals also changed their tactics and quickly adjusted to the best ways to perpetrate fraud. And so what we saw during the pandemic was a shift from some of these traditional identity fraud, attacks that we've been looking at for years, to scams. And when we talk about scams, we're talking about a communication that was sent directly to a consumer that triggered a consumer to have some kind of response that resulted in fraud. So the cyber criminals, as always, were pretty crafty, and they targeted their scams in a way that preyed on consumers' unique vulnerabilities. So similar to what we've seen with phishing attacks over the course of the last 10 to 12 years, where these phishing attacks have become much more targeted, now moving into spear phishing. Scams targeted consumers via communication channels in a similar way that really kind of preyed on what they're used to. So the communications channels that they used most often, whether it be an email, a text, if they're using social media chats. And then these scams brought in something that would jeopardize something important to these individuals. So let's say, for instance, financial accounts or social security, something that was based on the varying consumer generational differences that resulted in the fraud. Next slide, please. So just to give a quick overview, our Javelin's identity fraud study, which is now in its 18th year, included feedback from 5,000 US consumers and was fielded between October and November of 2020. Now, as you can see by looking at this slide, if we hadn't looked at scams, which we looked at scams for the first time this year in 2020, the overall picture would have been much more positive. We would have thought that, we would have seen a significant decline in traditional identity fraud. You can see here, the total would have only been 13 billion. But when we bring in the scam angle, which totaled 43 billion, and we combine that together, we see that the fraud picture is quite different, totaling $56 billion. And we see that because of the pandemic, which resulted in consumers not using credit and debit cards in physical stores, not going to ATMs for cash, not visiting bank branches to open accounts, we saw this. That's why we think we saw this significant decline in the traditional identity fraud. So you can see that when we look at 2019, we had 16.9 billion in traditional identity fraud. So definitely a huge uptick in fraud to 56 billion in 2020. And it will be interesting to see as we move into 2021, because we will continue to track scams from this point forward, how different the fraud picture will be. Next slide, please. Again, as I mentioned, the surprising, but maybe not so surprising decline in losses linked to traditional identity fraud kind of makes sense when we look at the unique environment that we lived in 2020. I mentioned earlier that consumers transitioned to digital channels for commerce, and cyber criminals transitioned their mode of attack to scams, these communications that targeted consumers directly and triggered them to have some kind of response. That said, Javelin doesn't believe that the transition means account takeover and new account fraud will not remain viable fraud avenues. In fact, from a new account fraud perspective, we did see that cyber criminals exploited the isolation of the pandemic when it came to loans. So as auto lenders and mortgage brokers had to quickly transition to remote loan origination, cyber criminals readily took advantage of that by exploiting some of the gaps in authentication. And that resulted just because these lenders weren't meeting the borrowers face-to-face, right, in person. So many of these lenders didn't deploy what we call stepped-up authentication, such as document scanning, driver's license scanning, or using biometrics. They relied too heavily on KBA and basic passwords. In some cases, even one-time passcodes, which we'll talk about later, can easily be circumvented. And so all of these things resulted in upticks in loan origination fraud because it was being done remotely. Next slide, please. But as mentioned previously, scams obviously accounted for the greatest losses and the most victims. So where we only saw 10 million consumers falling victim to traditional identity fraud, we saw 39 million consumers falling victim to identity fraud scams. And the types of scams that we saw being most prevalent and preying on consumers, again, was based on the channels that they used, and that was based on generational differences, which we'll get into a little bit later. But when we think about peer-to-peer transfers, the deposits of checks via remote deposit as part of a money mule scheme, telephony scams delivered via robocalls, which primarily target older consumers, and then of course some of the traditional communications like email, text, social media chats also were used to communicate with consumers and triggered them to take some kind of action that resulted in fraud. Next slide, please. So let's take a look at some of these generational differences and look at some of the different types of scams and how they targeted consumers. It is worth noting that the younger consumers, those aged 34 and younger, were the ones most likely to fall victim to a scam. These consumers are using social media more often than other generations. They share more on social media, and all of these things make them easier targets for cyber criminals. They also have riskier behaviors in that they are more likely to use P2P for transactions, and they're often more likely to not fully vet people that they get friend requests from, or even when they're doing some of these P2P transactions, not fully vetting or verifying the person they're sending the money to. Now, our oldest consumers were the least likely to fall victim to a scam, and that's presumably because their behaviors are less risky. But there were certain scams that they were more likely to fall for, such as the telephony scams, tech support scams, or even some of these in-person scams, which again, we'll get into a little bit later, for home services such as roof repair or driveway repaving. And as I mentioned before, if we look at some of the stats here, and you won't be able to see these here, but 38% of consumers aged 34 and younger said that they fell victim to an identity fraud scam. Only 18% of consumers aged 55 and over indicated that they fell for a scam. And you can see the types of triggers if you look at the screen here that spurred a response. So let's take the 41 to 56-year-old age group as an example. They were triggered to take some sort of action based on a threat to their financial information. And that's not surprising, given that this group is still working, has higher assets than younger generations included in the study, and is nearing retirement. So this was obviously something that would be important to them. But they share some commonalities with the younger generation, the 24 to 40-year-old group, and that they also were triggered by things like parcel tracking scams. Now, I know that we've all gotten these, and I think we can all admit that they increased during the pandemic. And that's not surprising, all of us getting a text message or an email for a package that we didn't actually order. But because so many of us were ordering things and having it delivered to our homes, you could see how this would trigger a response. The same is true for older generations, those 57 to 75. See the triggers: healthcare, social security benefits. These are two things that are of obvious importance to this group. And then the IRS angle, which was probably linked to the stimulus, is not surprising either, given that most of the consumers in this group are retired and possibly on fixed incomes. So a perceived threat to a stimulus check would very easily trigger them to respond in haste. Next slide, please. Okay, great. So let's move into some of the discussion with our panelists. We're very hopeful that we'll have some time for Q&A at the end, but if we run out of time, because I do want our conversations to be engaging, we will ensure that we respond to all of your questions. via email, but please use the chat feature to submit those questions as we move throughout the discussion, and we are hopeful that we can get to them at the end. So let's talk a little bit about traditional account takeover declining. As I mentioned, we saw a decline in account takeover, presumably because these cyber criminals shifted their focus. Next slide, please. Okay, and Eric, I'm going to start with you here. As I mentioned, we saw this decline in 2020 for reasons that we're making assumptions about. Can we presume that account takeover will increase in 2021 now that consumers are slowly getting back to in-person communication, transacting, and coming out of isolation? Or do you think that there is no correlation and that the scams will continue to overshadow, and really that maybe the pandemic didn't have as much to do with the decline in traditional account takeover that we thought?
Yeah, it's a great question. Appreciate the opportunity to start off. You've touched upon some of this as we kicked off, Tracy. The pandemic and really the government responses to the pandemic created a target-rich environment for criminals. Cyber and organized crime very focused on targeting stimulus payment programs last year. A lot of the scams that you referenced were in, preying on people's emotions around helping, charitable activities around the COVID crisis. So, there is a sense in the fraud management community that as the stimulus and pandemic focus, that opportunity for criminals kind of winds down, that we do expect, somewhat of an uptick in the more traditional methods of how fraud was incurred, account takeover, as you indicated. That said, we've also created an environment where there's a lot of behavioral changes that have been driven. More people transacting remotely, digital channels, for example, newbies, as they say for the more veteran online folks. So with more people, there's still a plethora of compromised data available out there. And that indicates that we might see that type of uptick. But at the same time, the prevention tools and techniques that we use to thwart these attempts have also improved considerably. Biometrics, I know we're going to talk more about that here today, identity resolution engines, artificial intelligence. So hopefully we've leveled the playing field a little bit, and we're prepared for any potential increase in exposure as we go forward here and the pandemic kind of subsides.
Great, thanks for that, Eric. So let's launch our first poll question, please. All right, let's just give the respondents a moment to respond there. David, I'm going to pose this question to you. We do feel that the pandemic had a direct impact on card present fraud, again, as consumers were transacting less and really not at all in person. What changes do you anticipate as consumers start to transact in person again? What changes do you expect to see?
Yeah, thanks, Tracy. It's a good question. There's a couple interesting data points that are in the full report that sit underneath the graph we were just looking at. So in 2020, losses from account takeover fraud, that's $6 billion, were larger than existing account fraud, $5.5 billion, for the first time. So conclusions you can draw from that are, one, all the work that kind of we as a payments industry have been doing over the past years, both in the face-to-face world, moving from, to chip and pin, and then in the digital commerce world with solutions like, 3D Secure and tokenization, those seem to be really starting to pay off. What we've seen is the fraud move upstream from face-to-face to online, and now further upstream to the account level for identity theft, account takeover, synthetic fraud, et cetera. And I think this is further reinforced by the types of data elements that fraudsters are after. So between 2019 and 2020, credit card number fell by 7%, from 31% to 24%, which is near where email address and password is, 22%. So the fraudsters are finding it more effective to take over your account than to steal a payment card and make a payment with it.
Right, and so traditional account takeover, new account fraud declined as consumers moved to these digital channels for remote originations. And as I mentioned earlier, we did see some upticks in loan and primary mortgage fraud as loan origination just had to quickly pivot, right? Many of those lenders were not prepared or didn't have the ability to adequately authenticate users without meeting them face to face. So you mentioned, and you touched on this a little bit, David, but I'd like for you to elaborate. What can we expect in 2021? I mean, do you think that stronger authentication is something that is more widespread as a result of the pandemic?
Yeah, I'd say that in industries that haven't traditionally had that layer of payment authentication, where their business is primarily protected at the account level and their financial transactions happening, there's a greater need for stronger customer authentication. Moving away from usernames, ABA, and passwords that can be easily stolen into something stronger, and I know we'll talk about that later. I fully expect these trends to continue. A large real estate company last month went public, and there's been a lot of discussion around how part of their valuation is driven by the fact that they're a technology company. So bringing all that, the value they've had to rely on during the pandemic, better experience solutions for their customers, a lot of that's digitization. So taking the friction out of customer experience, making these processes easier, faster, those trends are only going to continue, which means more customer data online, more opportunities for fraud. So that need for a strong authentication and protection is going to only increase.
Exactly. Yeah, and as mentioned earlier, behaviors did change, right? And so people will still probably transact, remotely. I don't think we'll ever fully go back to the world that we lived in pre-pandemic. And so you can see the responses here to the poll. I don't think anything is very surprising here, although interesting that 38% of our attendees thought that account takeover would remain steady. So it'll be interesting to see what comes back in our 2021 data. Next slide, please. Okay, so let's move into scams, and obviously scams was such a big part of the story in 2020. And again, how we define them as being an action from a criminal that triggers a direct response from the consumer. Kathy, I'd like to pose this question for you. Let's talk a little bit about the psychological impact of falling victim to a scam, especially for consumers who fall into that age group of 50 plus. It's the scammer's tool to put pressure, urgency, psychological triggers onto consumers. Being in an emotional, reactive state, you just don't make good decisions when you're under pressure like that.
Yeah, thank you for asking the question. You're absolutely right. I mean, if you're in a heightened emotional state, which is where the scammer wants you, they know this. If you get there, you really can't access that logical thinking process that we all have. So it's why scams that to us seem like, oh my goodness, how is that even successful, to making so much sense to the person who is being targeted. They know what to do to get us into that heightened emotional state. And guess what? During a pandemic, everyone's in a heightened emotional state, which is why I think we've seen such an explosion of scams.
And then too, looking at the generational differences, telephony scams, I don't think was surprising that targeted, older consumers much more so than the younger consumers. And I think there's just part of that where younger consumers, feel okay not to answer or just to hang up on someone, whereas older consumers, it's a social acceptance thing as well.
Well, absolutely. I mean, I know my mom remembers when the phone came into her house and it was a big deal, and that's how you connected with the outside world. And if you grow up with that as your starting point, and then you go through the years of teaching your kids how to politely answer the phone every time it rings and all that kind of stuff, it's a tool that you can't just walk away from. It's and so your reaction is going to be what it always has been, to pick up that phone. It's not polite if you don't answer. And if you do answer and you want to get off the phone because you realize it's an uncomfortable situation, you may, as an older person, have trouble getting off because, they're more polite than we are, frankly.
So let's talk about this a little bit more in depth. And Paige, I'm going to move this question to you. So I mentioned earlier that scams such as tech support and home improvement, which we will delve into a little bit on this slide, often target that group of consumers that falls into the 50 plus age range. And there's this kind of stigma that's attached to falling victim to a scam. You feel kind of foolish if you fall victim to a scam, and that's something that is unfortunate. How can we as an industry do a better job of not only educating consumers about scam, but kind of removing or reducing that stigma that's attached to falling victim to a scam?
Well, it's interesting that the most prevalent scams that we're seeing in our resolution center today are Social Security scam calls. And unfortunately, as you said, the climate we're in makes some people more vulnerable to these types of scams. And because of the emotional component, they're eager to receive unemployment benefits or stimulus checks, and therefore more prone to act on anything related to their Social Security number. When we get these type of calls, the first thing that we do, to your point, is education. Is that nobody will call you from Social Security office. They just will never call. And, we walk them through a number of safeguards, including placing a fraud alert or a credit freeze or utilizing opt-out services and submitting an FTC complaint. And, we saw in your research that identity fraud scams resulted in 3 times higher than traditional identity fraud losses. And that's really serious news. And scams are harder to prevent. There's not really technology that can protect consumers from scams, maybe with the exception of anti-phishing software. Instead, they present as legitimate solicitations or communications, not just an email, snail mail, as you mentioned, postcards, phone calls, texts, etc. So if a victim believes it's the real thing, there's typically no hesitation in providing that sensitive data that's being requested or clicking on a malicious link. And really that alone underscores the importance of why consumer education is so critical. Consumers need to know what to look out for, and they need to know what is standard protocol from a particular institution when it comes to certain entities contacting them, asking for personal information, and also to know when just to hang up. Many consumers find it nearly impossible to stay abreast of all of these scammer tactics, and are all, and these tactics are evolving and becoming more and more sophisticated. So, to feel truly protected, people need expert assistance, and there are services out there that can help. Consumers can take advantage of these assistance services, which provide case-by-case assessments on the likelihood that what you've received is a scam or not.
Yeah, that's great, Paige. And we'll delve into some of the education components a little bit later in the presentation. I did want to ask you, though, when we look at this slide here, obviously we see, the fraud shifting, and some of these scams, like the tech support scam and the home improvement scam, have been around for a long time. So we understand that 2020 was a unique year, but is there more to the scam story?
I think 2020 was a unique year with the idea that these scams were highlighted. I think because of COVID, it really shined a light on it. And sometimes that's a good thing because more people are paying attention to it. But as far as scams go, scams have been around for a while, and many of us that are in this business, there's a reason why we're in this business. I mean, there's just a lot out there, and if you feel like you've got your arms around one particular scam, there'll be a black hat out there that is created a new scam. And so it really kind of keeps us on our toes. And so that's why education is so critical.
Exactly. Let's launch our next poll, please, and get the audience perspective on will scams decline in 2021? And so while that's running, Kathy, I'm going to come back to you. As Paige mentioned, scams have been around for a long time. Why did they flourish because of the pandemic? And do you anticipate to see some kind of change in 2021?
I wish I could say that we would, but I don't think there's any indication that that's going to happen because the scammers have great success. Even if they, dial 1,000 numbers and one person responds and they make a good deal of money from that person, it's worth them trying again, right? So I don't see it going down. Education is super important. It seems like it's all around us, but the vast majority of us don't end up falling victim to a scam. But I think the reason that we've seen so much, when you take a look at all the data on that last slide about all the scams that were happening, they weren't just pandemic related.
No.
And that's because the scammers just were taking advantage. Sure, there were stimulus and there were pandemic related scams, but it was also the tried and the true and variations on the same, because they were taking advantage of people just sort of not being 100% present because they were worried about one or another factor that had a life impact on them related to COVID and the economic downturn.
Exactly. And while we wait for those results, there's the results there. So let's just take a quick look. Do you expect scams to decline? in 2021. Interesting. No one expects them to decline. So I think we're all on the same page. It will be interesting to see though how the scams, change and adjust. And one thing that I was thinking about in preparation for our discussion today is that, it sounds cliche at this point, but it really is true. We don't ever see any kind of scam or attack disappear. We just see new ones emerge, right? So some of those tried and true scams like knocking on your door to offer handyman services, have been effective and remain effective.
Yeah.
Now I'd like to pose this for Kathy and Paige, but really anyone on the call here can respond to this, because I think one of the biggest challenges is we all know that consumer education is important, but how do we do it in an effective way? Financial institutions are doing a lot more to educate consumers, through their online banking platforms about scams or to offer assistance, but it's only as good as the consumers that you reach. So what are your thoughts about how we can make education more effective? And I'll start with you, Kathy, and then we'll move to Paige, and then anyone else who wants to respond to that.
It's kind of a universal challenge to get anybody to focus on scams and fraud when we, as our default, don't think it's ever going to happen to us. So one of the things that we're trying at AARP with the Fraud Watch Network is to engage people in different ways. So we're entertaining and educating through a podcast called The Perfect Scam, and it's entering its 9th season. We've had over 2 million downloads. That's someone who doesn't think it's ever going to happen to them, but they're also listening. And there are data that say that if you know about a specific scam, you are far less likely to engage with it. And if you do engage, you're far less likely to lose money or sensitive personal information as well. But it's also about the language that we use. If we just, yell at people, don't fall for it, don't be stupid, that's not going to work. We have to use language that has empathy, that helps people understand that they didn't do something wrong, or if they fall victim to a scam, it's not because they did or didn't know something, or they should or shouldn't have known something. It's the criminal. That's whose fault it is. And we need to keep that in mind when we're educating as well.
Exactly. Paige?
Yeah, again, I think education is truly the only method we have to combat the scams. And as a society, we really need to get better at differentiating what's out of the norm, what's too good to be true versus legitimate solicitation. And one thing that we always tell customers are, if someone calls asking for personal or financial information, hang up. No legitimate company should be calling to ask for this information over the phone. And if you're unsure, tell them you'll call them back using a legitimate phone number from their corporate website or what have you. And we're still seeing plenty of phishing emails, and so you can't be too cautious. And it's better not to click on the links in the emails, even though they look, these phishing emails look very much like a banking website. And so it's better to navigate to that website yourself, type in the URL yourself in another browser. All that said, at the end of the day, though, we can say all these things, we can try our best to communicate these safeguards to our customers, but it really needs to become second nature for them. And this is where our challenge is, and how do we get to that point? And really, the only way to do that is that the message be echoed across every organization that people do business with. So that means banks, credit unions, insurance companies, credit card companies, even the stores that they shop at. And it just can't be us, identity theft and cyber protection companies. And it can't just be their banks telling them how to steer clear of scams and tighten up their identities. But it really needs to be, all organizations kind of pitching in together. And all organizations should want their customers to be staying safe. For us, education is a cornerstone of our product. And while that may not be the case for all organizations, it certainly is an easy way to show your customers that you care about them. And by communicating ways to better protect their information and letting them know you're doing all that you can to be a good custodian and steward of their data as well. I think also organizations making cybersecurity a larger part of their culture is really critical. And That means you're ultimately better protecting your company as well if you're ensuring that your vendors, your partners, your employees, everything is protected. But really the only way that this can be done is that everyone must be more well-versed about abnormal or disingenuous solicitations, what they look like, and know that it's a scammer behind that. And, I think most people, and more than ever, scams are happening more than ever, as we've discussed and learned through this survey. And it's unfortunate, but awareness and education is really the first step.
Yeah, and David, I'm just going to pick on you quickly, just because you and I have talked about this a little bit in the past too. And, trying to educate in an effect, we all know that education is necessary. We know we need to get the word out to consumers about what the scams look like, but how do you reach them, and doing it in an effective way is the biggest challenge. And you had just mentioned that education has been kind of part of what's been going on at Visa for a long time, like just constant communication with your customers.
Yes, absolutely. I think we try to, we're a network, so we're always trying to educate and push information out that we see kind of as a network to our, to our financial institution customers, to our merchant customers as well. And we have kind of, quarterly security summits with our, our financial institutions region by region, kind of go through both the global trends as well as specific trends in each region. It's a big part of, kind of our role in the ecosystem. I think the other thing is it's easy to think, you always think of like the hooded sweatshirt, the hacker who's kind of, it's a one-to-one kind of attack. This is enterprise fraud. These are companies who are doing concerted, organized, wide-scale attacks. Like that's who we're up against. And I think if consumers can start to see that, it's not just like a person, but it's probably a, some different organizations that's after personal information, that should change some of the, how you interact with these, these attacks that come through to your phone or your email.
Yeah, that's a great point. Would anyone else like to discuss the education piece?
Hey, I just wanted to add, I agree with everything that was said. Education is critical, and it's something we promote a lot with our institutions and banks and credit unions we work with. The other thing I would say is engagement. Provide a conduit, provide a mechanism to kind of something I like to say, deputize your consumer. The savvy consumer that wants to be involved. There are several things, whether it's mobile payment spend controls on your phone, whether it's real-time alert notifications that you can set up so that you're aware when something happens, credit bureau locks and credit watch programs. If as a component of your education, you also provide an avenue for them to actually get engaged and help protecting their own assets, there is a large percentage of the population that is interested in doing so. And I think that's a big part of education and engagement.
Yeah, you need to offer them the tools. Makes perfect sense.
Yeah, and I think, as a community, not just those of us who work in fraud, but in the broader community that we all live in, we have a role to play. Collectively, the fraud is the enemy, right? And so just as you shared with us how the enterprise fraudsters, as David put it, are targeting the demographics in their most comfortable environment. That's where our education needs to happen as well. So outside of the organizations that we work at, we need to reach out to schools. We need to have this as part of their curricula. Cybersecurity is slowly getting into schools and so forth, but we need to really help insert ourselves to the behavior that younger demographic exhibit online is freedom of sharing data and so forth, and just really trying to infiltrate and help them understand what a scam could look like and what the impact is to them, because they might not feel that financial impact as much as their parents. And then, just really rallying around getting into that grassroots level and mindset is something that we can all do at our different communities that we're in helping. Don't, just treat the fraudsters, the con enemy, excuse me, that will help us tremendously as a whole as we go, because the fraud's going to evolve. Just as our digital behavior evolves, so is the fraud. And so we just got to try and think ahead of that and educate the youngsters.
Yeah, great point, Cindy. Thank you. Okay, so let's go ahead and move on to the next slide, please. Okay, let's talk a little bit about authentication. And, you know, one of the things that we noted in the report is that we truly do see that we're finally at a tipping point for stronger authentication, with consumers saying that they do favor the use of biometrics over things like static passwords. So we really are, you know, at a tipping point. And this is something that the industry should be taking advantage of. David, I'm going to come back to you. You know, I know that we've all talked about the fact that we're all big supporters of biometrics. And I know that this is something that has been important for Visa, just trying to get rid of all the sensitive data, right? Any kind of PII that's involved in authentication.
Yeah, I think this is kind of the start of the good news part of the, the story, where there are some solutions that can really help. So, you know, the trends that are accelerating stronger authentication, certainly regulation, but the proliferation of smartphones and smart devices that are biometric enabled, you know, the amount of time that we're spending with these devices have accelerated, you know, the trends at Visa around like digitization of commerce have, you know, we've moved years ahead of where, you know, we thought pre-pandemic. Well, one of the strong customer authentication solutions that's starting to come to market now is based on an industry group called FIDO, F-I-D-O, which stands for Fast Identity Online, and it's an authentication standard that's built into both device manufacturers, so Apple and Android, as well as iOS and Android, as well as the browsers, which means there's now broad support for a stronger authentication mechanism, and we're big fans of that and trying to help get behind that and educate our ecosystem about this biometric way of doing strong authentication. We're spending a lot of time in Europe where there's regulation around SCA as part of this PSTT regulation, and looking to integrate the stronger authentication with the payments flow to provide both a stronger way and an easier way for consumers to authenticate.
That's great. Eric, I want to come back to you because I know that, you know, this is something from FIS's perspective that obviously is close to the heart as well.
Yeah, absolutely. I mean, FIS very focused on data privacy, you know, removing personal information, keeping it secure, really trying to adopt solutions where PII isn't used. And I mean, tokenization is a good example, biometrics. You know, consumers are clearly trending to a higher level of comfort with these, and I think your survey calls that out well. There's no doubt that the inherent security improvements are significant. And I think, you know, maybe some of the challenge in the past, and David kind of said with the ubiquity of you know, biometric enabled smartphones everywhere. The other thing I would say is just the advancements with this technology, the economies of scale we've been able to reach. Maybe some of the barriers to entry in the past for some of the smallest issuers has been more around cost, and we're seeing that playing field kind of be leveled with, again, the advancements in technology, some of the economies of scale, and you know, it's really allowing these type of solutions to become much more economical and easy to invest in for the smallest issuers. So, you know, it's good that it's not just for, you know, the big players, but, you know, the way that we're going to get the penetration we need is really all on board, right? So it's good to see that this is now being pushed down into, you know, again, what I would call some of the smaller players, smaller issuers in the industry. Everybody realizes the importance.
Yeah, exactly. And we're only as secure as our lowest hanging fruit, right? So until the entire industry is using stronger authentication, we're going to have weaknesses. Let's move to the next slide, please. And I'd like to bring you into the discussion here, Cindy. You know, so we've discussed that consumers are quickly losing faith in the security of static passwords, and they are favoring the use of biometrics and things like document scanning. I'm just using those as two examples. Even more so over the one-time passcodes, which we all here know can easily be circumvented, but I think it's promising to see that the consumers realize that, you know, as well, that if their mobile number is compromised or their email account is taken over, that the one-time passcodes can easily be circumvented. But what I find most interesting about this slide is that for the first time, consumer perception about the effectiveness of voice biometrics as an authentication method has kind of hit that 50% mark. And I think the message for FIs is that consumers understand that we need to move to something stronger, and it's a golden opportunity for financial services, quite frankly, to push stronger authentication.
Yeah, thanks, Tracy. I think, you know, consumers today, particularly post-pandemic and the digitization that we've experienced, are really looking for both trust and convenience, and they're demanding trust from the vendors in which they transact, more so than they've ever before. And so when you think about the trust part about it and why they might not be trusting their passwords is because the scams are up, and they do know that PII is a problem. And so when they think of a biometric, be it a fingerprint, a face, or a voice, it's something that they are. And so that makes it even harder to spoof or to act and impersonate. And so they start to trust that a little bit more. And then from a convenience factor, when you think about passwords or you think about knowledge-based authentication, sometimes they have to remember their password. Sometimes they have to go and look about where it was that they wrote their password down. And, you know, a biometric is something that they can just use. Couple that with the comments that we've had from the panel relative to the ubiquity of cell phone usage and biometrics being used to validate access to your cell phone, those things start to feel a lot like convenience for the consumer or our members or whatever the case may be. And so you put those things together and they feel more comfortable. Hey, I've got some trust and I've got convenience. But, you know, any biometric, just like any strength of a password, is variable based on the fact that fraudsters are going to try and spoof whatever they can. And so when we think about voice as one of those layers of defense, it's a fun fact to say that 70 parts of our body are actually used to make up what our voice sounds like. And so the technology that we have today, whether it's the neural networks or the AI, when we take that first template around voice and we capture what voice is, and then we use that as a basis to validate someone's identity, it's really kind of, I wouldn't say spoof proof because nothing is there, but it's a very strong means, and it's highly convenient for the consumer. Imagine that you can do it in two ways. You could do it just by talking, and that's a passive authentication that's happening in the background because you've set up that template, or you can do it in a more active way where you ask them to repeat a statement or a phrase or something like that. And that way you are able to validate the tone of their voice, that it really is them using the template of these 70 body parts that we talk about.
So I'd like for you to expand there just a little bit, Cindy, because this is something that I've thought about as well. Just from a deepfakes perspective, how easy would it be to copy or mimic my voice, right? If someone could be recording it right now, or if I were to do a podcast as an example. But you're saying that even then, because you're using so many different points of recognition for the voice, it would be very difficult to mimic or spoof.
Yeah, I mean, I think just, you know, I want to caveat that the best way to have any sort of fraud defense is to have different layers, just like you would with a password and a document and then a biometric, you would want layers. So let's take about the deep fakes or the spoofing of the voice. If you have it in such a way, depending on how you want to step up, if it's a wealth management account that you want access to, you're probably going to want to have layers of voice. And the technology today allows us to be pretty sophisticated with that, to understand if the person's under duress, to understand if it's a normal voice. We can use the tones and all of these body parts. So imagine somebody is holding you under duress, you know, the way in which you say that back is going to sound different. Or you've recorded Tracy on the webinar today and you're trying to get that statement out of her, it's going to be difficult, right? You could do it, but you're going to sound different to that very passive template that you've laid down at the beginning. I think it's also important to understand that you can use them in the layers. You can use it text-based or non-text-based. So you could also, as a two-factor, send them something to read. And that way you would be able to tell if the person is real or not.
Yeah, that's interesting. That makes a lot of sense. Just quickly on this slide before we move forward, one thing that was surprising to me was that we see faith in the efficacy of fingerprint scanning declining. I didn't understand that. To me, that was the one that was kind of hard to digest in the responses.
Yeah, it was a little interesting to me as well. And I wouldn't say it's one as much as faith as it is convenience and where these technology companies have moved us. And so when we think about authentication around face being widely accepted on many of the cell phone devices that we have today, the fact that we've just come out of a pandemic and we're used to our face being on screen and so forth, as opposed to having access through a fingerprint, I think it's more around that than anything else. But there's also the worry that folks have that the PII left by a fingerprint because you've been using it longer, that, oh, am I getting this? You know, you use your fingerprint in forensics, and they don't want their forensic left somewhere. So there's all of you, Kathy, probably chime in, there's all of these psychological things that go on which may be affecting that score. But I think mainly it's around convenience.
Yeah, and that makes sense. And you're right. I think people have gotten more accustomed perhaps to say, didn't really think about, you know, seeing their face. And so that could be a big part of it. Let's move to the next slide, please. So as I mentioned earlier, you know, consumers understand that these one-time passcodes are not the most secure methods of authentication because they can be easily circumvented if an email account or a mobile account is taken over. Yet we see here that one-time passcodes are among the most common authentication methods that consumers say they're still using today. David, you know, let's come back to you. I'd like to get a response there. Why has the industry been reluctant to move beyond one-time passcodes if they know that they can easily be circumvented? And do you think that moving forward, that's going to change because of the pandemic?
Yeah, I'm hopeful that, you know, 5 years from now, we'll look back at, you know, at one-time passwords the same way we kind of look at passwords and knowledge-based authentication, that will have moved off. You know, the strong customer authentication solutions that that we're talking about are, you know, their goal is to prevent the phishing attacks, the man-in-the-middle attacks. And really, it's reducing the surface area of the attack. So, you know, in order for me to, if you're using a biometric you know, what you're doing is really you're unlocking your device with a biometric, and then there's a key pair between the key that's stored on your device and the server that you're going to. So, you know, in your traditional sense, you know, when you get a scam OTP and it takes you to a link to a different website, what the hacker's trying to do is you know, steal your username and password. But if you're using, you know, a strong customer authentication with a biometric, there's nothing to steal. There's no credentials. The key pair doesn't match, and the attack is over. So that's really what we're trying to get to, is these solutions that, you know, really narrow down the surface area where the attack can happen and prevent us having that, you know, PI data as a vector for those attacks.
Yeah, just getting that data, yeah, out of the equation altogether. So talking about making, you know, the transaction more convenient, behavioral biometrics obviously plays, you know, a role here, and it is being embraced by consumers and the industry for stronger authentication. Paige, could you talk a little bit about, you know, the increasing role of analytics in authentication and removing the friction and the impact that's having on the consumer experience?
Yeah, I mean, we with noting in the study that passwords were declining, this was really affirming for us because we're actually going to deploy a new MFA tool at some point here in the near future, and it really looks at you know, a confidence score when somebody is engaging with our portal, and again adding multi-layers of technology, such as determining if the device that's being used is normal for that customer, using also passive biometrics, so analyzing how they type, how they hold the device, how they move the mouse. Some of the more cumbersome authentication methods, and essentially just having them be themselves while interacting with our platform really removes any friction. And you know, it's a cool tool provided by MasterCard that really just verifies who the person is by simply letting them behave the way that's unique to them. So lets them be themselves easily, and so all of the analytics that are pulled in are looking at a number of different points in the way that the consumer behaves, and allows for a seamless experience.
Great. So Cindy, I'm going to take this back to you. Let's talk a little bit about adding friction, right? The opposite of that. Consumers do seem to realize that having friction is a positive from a security standpoint, and they understand that out-of-band authentication may not be the most reliable, as we've mentioned, with mobile phones and email accounts, because they could be taken over. But let's think about like remote origination. They do seem to favor things like document scanning, right? So doing a little bit more to ensure that they're doing their part to prevent fraud.
Yeah, and I think again, there's certain outcomes of the pandemic and folks having to access some of their non-familiar vendors online for the first time, that they were asked to show identity, and they started to imagine that, well, if I was catching a flight, I might have to show my identity. If I was walking into a hotel room, I would have to show my identity. And it becomes one of those layers of defense that they're familiar with. When you do it with technology that makes it simple, and you combine it with technology as a separate layer of defense, and they realize, well, hey, this is protecting me. And I know that the platform that I'm about to engage with, be it a bank or a marketplace like Instacart that's delivering my groceries, and they're actually asking me to validate myself, this feels like a safer place to transact than somewhere where I'm not asked to step through these hoops. Now, this is, as I said, being validated through the pandemic period because of the scams and because of awareness that there are unsafe environments. And so it's just more acceptable to them than it ever has been before, that a little friction actually is a positive thing.
It's not a bad thing, right? Let's go ahead and launch the third and final poll, please. Okay, so we're just going to look here, how much attention is the industry paying to consumer education, which again kind of ties into educating consumers about authentication, but also about the scams. Kathy, I'm going to come back to you while we're letting this poll run while we wait for the results. Again, just circling back to the challenge of education, and it really has to be targeted toward the consumers based on generational differences.
Yeah, to a large degree, it does, because you want to reach people where they are, right? So if we're trying to talk to 18 to 24-year-olds about, don't believe it if the Social Security Administration calls. First of all, they're like, what's the Social Security Administration? And second of all, like, what? I don't answer my phone. So it has to be relevant to the way they're living their lives on their technology. And that's why, scammers are so successful, particularly among older adults with the telephone, because that's what older adults are more confident with and more accustomed to than others.
And so here's the results. Well, this makes me feel better that consumer education has been a focus for a long time. So that's definitely a positive. I would not have expected that to be the response, or at least not that many, more than half of our attendees. Is that surprising? A good sign, but. Kathy, is that surprising to you, the 63%?
Not particularly. I think most, especially in the financial institution world, you see it because they get it. It doesn't mean it's necessarily effective. It doesn't necessarily mean it's being accessed, but it's there.
But it's there. Yeah, we'll move into a more positive direction, hopefully, in 2021, where the education is concerned. So one area that we often forget to think about, and we've talked about it, here throughout the course of our webinar, but it is this emotional toll that falling victim to a fraud or a scam has on consumers. Yet we all know that falling victim to a scam in particular does seem to have a more dramatic effect on the victim's psyche. Circling back to you quickly, Kathy, this emotional toll that falling victim to fraud has on consumers, we can't underestimate it. I mean, they're embarrassed, they fall victim, they're likely underreporting. I mean, even in our survey, we feel that those who fell victim to scams probably likely underreported. So it's probably a much higher number than maybe even reported here. So can you talk a little bit about, you touched on it, but the shaming that we need to remove out of the equation, especially when it comes to how we're educating consumers about scams?
Yeah, you just hit it on the head. Because society, we all talk about scams in sort of a way that puts the onus on the victim versus on the criminal. You know, she was duped, he was swindled, she fell for it. I can't believe she fell for it. Mom, why did you do that? You know, and it feels embarrassing and humiliating. And if we talked about it differently, I think that there would be really large impacts, if I may, small from the individual and their family, but also very large from maybe we have a more empathetic ecosystem that people are in, and they would be more likely to seek help. And maybe legislators would realize the impact here isn't just someone losing a few $100. This could be someone who's lost their entire life savings. They're 93 years old and they are beside themselves, and they have exhibited the signs of severe moral distress, and something needs to be done about that.
Yeah, it's a great point, and something that I think, you know, we should all kind of keep in mind, especially as we're looking at the education programs. So let's take a look at this slide, and I'm going to come back to you, Eric. So again, having a poor experience, so not feeling that maybe you're getting enough assistance from your primary financial institution, it doesn't just adversely affect the client experience. It has dire effects for the bank or credit union too, right? Or maybe even any financial services provider, because we see that when FIs do not step in to help consumers resolve their fraud incidents, even if it was related to a scam that the institution isn't necessarily responsible for, those consumers are much more likely to close their accounts. And the scams, you know, they are a bit of a gray area. So what kind of recommendations would you give, or what kind of offerings could the FIs give that would help these consumers feel like they're being supported in some way, even if it doesn't mean making them whole for the fraud losses?
Yeah, it's a great question, and I go back to, you know, anything that a financial institution can do to ease the administrative burden on a consumer, really focus on reducing the amount of time they need to spend trying to resolve issues, often not understanding necessarily all of what they need to do, and then that empathy and peace of mind. I mean, it's going to go a long way to just, you know, establishing trust. We've seen this in enhanced brand loyalty scores. We've seen this in, you know, higher spend in some cases for institutions that that actually have a very good reputation for handling these type of situations. Just quick anecdote on myself. Don't you know, I fell victim to fraud myself. I'm a fraud executive a long time, and in the pandemic a few months ago, I started having debit cards show up in my mailbox in my name, tied to a P2P app that I never downloaded. And, you know, just trying to make sure, I knew that my full identity hadn't been stolen, et cetera, but just trying to go ahead and get those accounts closed and get somebody alerted to it. There was no actual conduit outside of the app itself. And
Wow.
now this is not an app that I've downloaded nor ever used. And I was just thinking, now I have a little bit more savvy. I have connections in the industry. So I was actually able to work backwards and found an executive contact at the parent company of this fintech. But it was a challenging experience, and I'm in the industry. And I just kept thinking about if my grandparents or even my parents had one of these show up, there was no way to actually get information and contact somebody, you know, outside of supposedly contact us through this app. So it was you know, an experience that was not liked by myself, and I'm pretty savvy around this, so I can only imagine, as Kathy, you know, you talk about some of where you help some of our older consumers, they would probably lose their mind in trying to figure out how to go ahead and resolve a situation like that with no easy communication channels to actually get help.
Yeah, that's a great example, right? Because if you face that many challenges, and again, you can just imagine what it would be like for just the average consumer. Can we move to the next slide, please? Okay, and again, you can see here the poor client experience. It does have sweeping effects, right? So consumer attrition increases when fraud issues are perceived to be unresolved. So let's just go back to that just for a moment, Eric. Let's use your example because I think it's a good one. What would have helped you in that situation? Would it have been beneficial if you could have just called your primary financial institution and been given some direction? You know, or maybe if they had just provided some resources online.
Yeah, so some online resources. I would have been happy to do an online chat. You know, I'm still kind of old school in the fact I like to talk to people. So, you know, a phone number, even the number that was listed on the back, and it was in super small print. I found the issuing bank tied to this fintech. And even in contacting them, they didn't really know much about anything either. So it was kind of this circuitous path that I went down. And yeah, just a clear 800 number, something as simple as that to start off with, or online chat, even email correspondence would have been helpful. But trying to push everything back into an app and wait for an in-app response when you have been victimized, you never downloaded the app, let alone intended to use it. It was challenging. So
I get that. Yeah, thank you. Well, we're at the top of the hour. I'm sorry that we didn't have time to do Q&A with the audience, but again, we'll be sure to get all of those questions, share them with the panelists, and then we can email those responses back out to you. But I think we've had some good discussion. I mean, I think a lot of this just relates to, wrapping up on how can we connect more with consumers, even if we can't make them whole, just providing them some resources. And I think all of you have touched on that in a very wonderful way. And we'll see maybe next year if that education piece improves. So I'd like to thank all of my panelists. I'd like to thank all of our attendees for taking time to be here today. Appreciate it.
Thank you.
Thanks, everyone.